Cracks are finally starting to show in the semiconductor space. Intel has fallen hard today. In fact, we can look over here at the heat map and we can see Intel is down about 10% today. Yeah, that's pretty crazy. Now, of course, everybody saw this coming, right? Anytime you see these huge moves, one of my mentors used to say there's something called the 50-80 rule. When you see a big, beautiful move like this, 80% of the time it can fall by 50%. And 50% of the time, it can fall by 80%. Now, generally, that works on itty bitty baby companies like SoFi, because SoFi's done it more than once. You SoFi bros, you know what's happened. Just get with reality. You know it's happened, okay? But big stocks like this, like multi-billion-dollar companies, I don't know if we could see the 50-80 rule. I'm definitely not one of those people who feels like they can tell the future. But one thing I can tell is that outlier signal on Intel, which is this tab here that had the sell signal literally yesterday. If you had made this big, beautiful run up in Intel literally yesterday morning, you could have said, you know what, now it's time to get out. And you would have saved 10% on that huge investment. So if you were trading Intel, let me know, because I absolutely know that a lot of you outliers had made a ton of money with that. So let's go. There's actually a ton of news stories that I want to get through today. Number one, as of 1 p.m. Eastern, the SOX, the semiconductor index, was having its worst day versus the S&P since the DeepSeek Monday last year. And before that, in 2008. Yeah, it's having a pretty nasty day over there. Let's go look at the SOX, SOX. That's the semiconductor index. As of right now, that's down how much? I moved my little drawing tool up here. As of right now, it's down about 4.5%. At one point, it was down over close to 7%. So yeah, definitely taking it on the nose today. What else? Copper prices have surged to a new record, and in fact, that's one of the assets that we have been looking at. If you guys remember, I pulled up copper, and we've been talking about. Oh, I clicked the wrong button. Hold on. We've been talking about copper over the last couple of days, and it did absolutely break to new highs. So we're going to be talking about copper more in a few minutes. But yeah, look at that copper move. Right? That's exactly what we've been talking about. Then we're talking about inflation. Tell me in the chat, because I know that you know inflation is way more than a couple percent. So much more than a couple percent on basically everything. New cars, 20. I thankfully haven't needed a shot for a new car in a couple of years. But goodness gravy, over the last 5 years, only 20%. I feel like that could be 200% at some points. Family health insurance. Oh my good gravy. Okay, so now that I am having to buy my own health insurance, it's not company sponsored. I spend, and I'm not exaggerating, $2,987 per month on health insurance. Let's call it $3,000 a month on health insurance. Dude, health insurance is absolutely bonkers when you got to pay out of pocket for it. Restaurants over 30%, electricity 40%, eggs 40%, gas 40%, transportation 40%, auto insurance 58%. Yeah, all over the place. Basically, everything costs way more than a couple percentage points. What else? Breaking. The Nasdaq extends losses to over 2% on the day after U.S. CPI inflation rises to its highest since May 2023. Okay, so inflation is definitely ticking up today. What's going on in Nasdaq? Yeah, it's pulling back. It's pulling back for sure. We're seeing that. And then rising rate volatility is where things are starting to get uncomfortable for the equities. So the MOVE index is basically the VIX of bonds, and that is now starting to pick up, and it just might have something in store for the S&P 500. Next, the bond market crisis is intensifying. I don't know about crisis, but while everyone's focused on AI, listen, I understand how to play the game. You understand how to play the game. If you don't put all kinds of like the bond crisis is intensifying, a complete meltdown, you're not doing it right. You're not doing the internet right. All right. So the U.S. bond market is in a complete meltdown. The 30-year is now above 5%, and the 10-year is nearing a pivotal 4.5% level, which resulted in Trump's 90-day tariff pause in April 2025. Long-term yields are now above levels seen prior to the Fed cuts, in another brutal reminder that the Fed cannot contain the long end of the yield curve. Right? The Fed doesn't contain the long end of the yield curve. In fact, that's up to the market to decide. At this rate, we'll likely see mortgages back over 7% this year. So yeah, there you go. And then, man, I found all kinds of different things I thought was interesting. Seriously delinquent credit card balances are about to surpass financial crisis records. Look at that. There's your cost of living crisis right there. Your cost of living crisis right there. The blue line, that's your credit cards, right? Boom. And then look at student loans. Student loans have gone absolutely bonkers as well. Auto loans, not pretty consistent. Home equity and then mortgages. Dude, this is like when I did consulting for a dozen years of financial institutions, this was my bread and butter. We talked about this all day, every day. So yeah, this is a big deal. This is a big deal. Let's keep going here. US inflation versus Fed funds. Can I put this up in TradingView? I bet I can. TradingView consistently surprises me with the cool stuff that we can do. I'd like to figure that out at one point. We don't have to do it right now. But yeah, Fed funds rate and CPI. Take that what you may. And then lastly, global yields. Very cool. All right, so let's do this. Let's go through all of the market and see what's going on right now. The SPY, even with the inflation, even with everything that's happening, is crashing to levels not seen since yesterday. Levels not seen since yesterday. It's super close. Then you got Nasdaq, which is actually selling off quite a bit more. Let's go look at RSP. So RSP is equal weighted S&P 500, and let's compare it to the SPY. So the SPY is going to be on the right-hand side. Equal weighted is going to be on the left-hand side. And yeah, you can see that this and this are telling two very different stories. In fact, what is that story right here? Don't worry, I got it. What's RSP? RSP divided by SPY is falling like gangbusters. Mega cap, SPY weighted outperformance, equal weight, narrow rally, mega caps carrying. Yeah. So basically, it's the big boys, right? I already closed that. Hang on. It's the big stocks that are absolutely carrying the market higher. The big stocks, right? Like the Nvidias, the Apples, the Googles, the Teslas, the Amazons. In fact, let's go to 1 month performance. We can take a look at that. Yeah. Where's all the bright green? It's concentrated in the biggest names. And this is what's been holding up the market. And this, my friends, is how you can actually see that happening. Now, because of this, right? Narrow leadership, be selective with caution, and a broad weakness, risk off defensive posture. Now, listen, I understand that the idea of jumping in as the market's been ricocheting higher, rocketing higher on both the Nasdaq and the SPY made all the sense in the world. But at this point, I feel like there's way more risk to the downside. And then we can take a look at the VIX. The VIX here is actually interestingly falling today. Surprised by that. So what is the VIX measuring? The VIX's actual measurement is put buying on the SPX index. So looking at this, surprisingly, people are buying less puts than they were yesterday. How about that? Very surprised by that. Speaking of puts, let's go over to the put call ratio. And we can see here that the put call ratio right there. Oh yeah, I added lines, making it easier, right? We're now back closer to the balance level, but we still have bullish sentiment in the market right now. Let's go look at MMFI. MMFI is currently sitting at 59%. So there are actually less stocks above their own 50-day moving average. So the MMFI is the percent of stocks above their own 50-day moving average. We just crossed under 60 today at 59.64. MMTH is similar, but this is the number of stocks below their 200-day moving average. So more stocks are giving up those as well. I'm definitely building a bearish case for you here. Now, let's go look at the 2-year yields. 2-year yields are flying, right? This chart is not what you want to see. This means that inflation is on the horizon. People are definitely expecting the Fed to be tighter for longer. And then you can look at the 10-year yield. It's now at 4.459, and it's putting more pressure on stocks, which is just think about this way, right? You've got the risk-free yield of the 10-year versus stocks, and if you can make more money on the risk-free rate, then you're going to be less likely to be putting your money in stocks. And then we can look at the 210 spread, and it's continuing to push lower. Now, that's not anything problematic right now. But if this does invert, it's at 47 basis points right now. That's the difference between the 2-year rate, which is right here, and the 10-year, which is right here. Both of those are moving down closer to each other today. And as long as that does not invert, the expectation is not for a recession on the horizon, but it is moving in that direction. Then lastly, the dollar index. The dollar index continues to fall, which is supporting gold, oil, and silver. So let's take a look over at gold, oil, and silver and see what's going on over there. Gold not doing a whole lot. You would think gold would really take the hint and start moving, because silver is on a rip-roaring rocket, right? Silver's really been moving in the last few days. In fact, how much has silver moved? Off this low down here up to here, we're up 20. Wow, silver is up 23% in the span of just a few days. Holy moly. Okay, so just keep your eye on silver. And then we just got brand new all-time highs on copper. Now, this is also an inflation metric. So anytime you see copper running like this, definitely could be possible inflationary signs, just like in oil. When oil starts picking up, that's definitely an inflationary sign as well. And that's exactly what we see. So let's take a look at the risk on assets real quick. Which sectors are we looking at for risk on? Okay, so we've got the tech sector over here. We've got the communications sector over here, which does include things like Google and Netflix and Meta. Then you've got the discretionary sector, which is your Amazons, your Teslas, your Fords, and then you've got the financial sector, right? The financial sector is starting to take a little bit of a curve back up, and that would make sense because a lot of them are going to make more money anytime that rates are going higher. So I'm not too surprised to see that going up. But yeah, these three up here are definitely taking it on the chin today. But what about the risk off sectors? Are we rotating out of risk on into risk off? I would say there is definitely rotation today. There's definitely rotation today. You can see XLE pushing up, XLU pushing up. This is utilities. And then you can see XLP. This is staples pushing up as well. So I'm here to tell you, let me be the first to tell you, I absolutely see a rotation coming on from the risk off sectors to the risk on sectors to the risk off sectors. This random guy is showing off the parts of why he's included in the smart people. Dude, you guys got too used to me just like hanging out talking about price. You forgot that I actually did all this for a living for like a dozen years. Y'all forgot about that. And I hope you didn't forget about this. I told you I've been working on a scorecard. Let's see how this is pulling through right now. Let's see how the scorecard. This is going to look weird. Hold on. There we go. Brand new scorecard. This is not available for anybody just yet, but let's break down what this scorecard represents. So first, what is the final verdict? Let's start at the top. The final verdict is choppy to neutral. Well, what do you mean choppy to neutral? That's where we're at today, right? And in fact, what's cool about the scorecard, and eventually I'll make this shareable, is it lights up over time how that's changed. So you can see where the green backgrounds are. You can see the yellow backgrounds. This is actually pretty cool, right? And if I scoot this over a little bit, I know this is big and in the way, but you can see just for how long things were getting pretty ugly. Okay, so overall reason why we have choppy neutral, the dollar, the trend on the dollar, the breadth of the sectors, and then we do have some rates on warnings. Now, what's the strongest thing going on? We've still got the SPY being super bullish right now. Then there are some warning signs. The 2 years working against us, the 10 years working against us, and then that 210 spread is working against us as well. Market trend is strong. Breadth is mixed. The SPY to RSP is falling. We talked about that. The RSP itself, though, is still in a bullish trend. The MMFI is still bullish, but waning. MMTH is falling. There are 4 bull sectors out of 11. Fed and rates is definitely not helping at all. Volatility is constructive. The VIX is falling a little bit today, which surprised me. And the dollar is strong. Dollar pressure, no. Oil spike, we're getting close to that. So this is measuring the last 5 days. Gold is over 3% in the last 5 days. Copper is going, and oil is getting close to that point. So this is a new scorecard, basically to give you an idea of what's going on macro picture wise. And like I say, y'all got way too used to me talking just price only, right? There's so much going on beneath the surface. So I'm excited to nerd out with you as well. Now, let's jump into the Fed watch. Now, this changed quite a lot. This changed a ton in the last 24 hours. Now we're looking at the year end, and I think it was yesterday we were over like 70% rates being unchanged. Now we're down at 50%. So, and then everything else is going to the upside, which makes sense because if you remember, we're looking at inflationary concerns. Now, what are the news headlines of the day? Oil crisis could escalate to a catastrophe soon. That sounds awesome. Petrobras pursues Mexico opportunities through Pemex partnership. I don't know anything about that. United Airlines flight attendants approve new contract. Sweet. Qualcomm falls 13%. Oh man, QCOM fell 13%. Let's go look at that QCOM. And then I need to change to this view because it's going to look crazy. Yeah, QCOM's falling like crazy. QCOM is falling like absolute gangbusters. And it just wiped out these order blocks all the way up. Hang on. I want to go look at QCOM real quick. QCOM. Did we get that sell signal yet? Not yet. But I wouldn't be surprised if you got that sell signal here on QCOM in the very, very near future. High coverage news. Top tech and business leaders, including Musk and Cook, joined Trump for a China summit. eBay declines GameStop's bid. Texas, what's up, Texas? What are we suing Netflix for? Alleged unauthorized data collection on children. Hims and Hers faces mixed results. I mean, the stock is getting abs. Have you seen Hims today? The stock is getting monkey hammered like no one's business. In fact, how much is it down? Not as much as I thought, actually. I thought it was a lot worse. But it's down right now. Oh, it's only down 14%. That's not that bad. It's only down 14%. Rigetti's Q1 earnings, small revenue beat, stock dip. Oh, wait a minute. Hang on. To this RGTI. This was one of those meme stocks for a minute. Yeah, this stock is getting monkey hammered pretty hard too. How much is this down today? Only 8%. Only 8%. Now, here's the thing. You don't ever have to trade through earnings. You don't ever have to trade through earnings. Okay. So let's go look at market breadth right now inside of Outlier. We can see that we do not have that crossover just yet. I thought we would, but as of right now, we certainly still don't. We are still looking at a bearish market breadth with less uptrends and more downtrends. And then if we look at the S&P, still sitting on that buy signal as it's pushing up higher and higher and higher. And same on the Qs, still got the buy signal as it's pushing higher and higher and higher. So just be aware. Like I say, I would not be getting into trades today, but I would definitely be keeping my risk in check on these. Like Nvidia right here has actually got a sell signal in place. Now, it did bounce after that sell signal. And just because it has a sell signal doesn't mean that it's going to go down to zero. But this absolutely looks to me like people are getting ready to buy the dip, basically running up into earnings is exactly what it looks like to me. Next, let's take a look at Micron. Micron been in an absolutely monster move lately since that buy signal. Let's go to Micron real quick. Dipping today. How much down? Is today the day to buy the dip? You're going to buy the Micron dip? It's only down 5%. Trust me, bro. It only goes up from here. It's only going to go up from here, right? Right? It has to go up. Just trust me, bro. And then lastly, Intel. We talked about Intel earlier. It absolutely got that sell signal today. So if you were in Intel's absolutely unbelievable 150% move before that buy signal or during that buy signal, now is a fantastic time, an absolutely tremendous time to be taking your profits. And listen, if you're ready to save time, make money, and start winning with less risk, head on over to outlier.com and grab your annual pass for just 82 cents a day and click one of these two videos. We'll talk soon.